Pinterest under pressure in pre-market trading, off just about 7%, a big sales miss in the fourth quarter, pointing to a slow rebound or struggling digital advertising business. Now, the social media company also providing a softer revenue outlook than the street expected. Let's break it all down with Ali Mogharabi. He's at Morningstar's senior equity analyst. Ali, it's great to have you here. So first, not too much focusing on the stock and share price reaction to this report, but taking into account what we did learn here from Pinterest, and we were drawing comparisons in our morning meeting to some of the weakness that we saw in Snap. So what was your takeaway from this quarter and just the ability of some of these smaller players to compete with their larger rivals?
Yes, actually, my overall takeaway from this quarter was pretty positive. I think in terms of making progress by these smaller players, you saw a few things. One, user growth continued. Two, the monetization of those users continued, partially also because there's engagement. And then, and three, of course, the ad spending by the advertisers, they showed a little bit more loyalty, I should say, to the platform. They're actually utilizing more than one of their ad tools to launch campaigns and to purchase ad inventory. And then the final thing was that margin expansion. I think it was pretty impressive, which shows that what we have been saying all along is that these guys, along with Meta, they have a network effect. So there is that flywheel, and it's starting to turn for Pinterest. So we upped our valuation to $43 a share, and we still think it is currently fairly valued.
Ali, what do you see in terms of the ability for Pinterest to close the gap over time between advertising revenue relative to impression growth? Because it seems like they're really prioritizing that, trying to make sure that advertisers feel like they're getting more bang for their buck. But Pinterest, on the other side, investors at least want to see that recognized in revenue and flow through to the almighty margin number that you were just mentioning a moment ago. And what steps do they need to take to get that done?
Well, I think basically increase that loyalty of the advertisers to that platform. So take some steps, providing them various types of ad tools in order to, of course, help the advertisers meet their objectives. And their objectives vary, right? You've got these guys that started off a few years ago with attracting more broad-based or brand advertising. And now, of course, most of the advertisers are looking for, have that short-term objective, looking for that, that conversion or direct response type of advertising take place in a short term. So, and these guys have actually progressed on that front. So I think if they provide that diverse types of ad tools for the advertisers, then over time you could see advertisers more permanently or for more long term allocate their ad budget towards that platform. And we're seeing that to start, at least based on the Q4 numbers.
When it comes to some of the biggest challenges here facing Pinterest, obviously slower growth here in the U.S., globally, a risk to their business. How are you factoring that in to the company's outlook, at least in the short term? Because there is a lot of uncertainty when you think about not only what's happening here in the U.S. on an election basis, but also what's happening around the world.
There is, especially the instability in the Middle East, and of course, slowdown in the economy, as you mentioned. But I think what these guys are focusing on, again, goes back to what I just said a second ago, that direct response, right? So in times of uncertainties, the advertisers mainly look for that immediate or very short-term conversion. They want that click from that ad onto their website and or on that platform itself for that user to make a purchase right away. And that's the direct response. And these guys are progressing on that front. So I think that will help them. And again, of course, more advertisers basically allocating a bigger chunk of that budget. Now, that entire pie may be reduced a little bit, but actually allocating a bigger slice of that pie towards Pinterest platform. And again, we're seeing these guys progress on that front.
One number stuck out to me from the call as well here. Gen Z, 40% of their user base. Now, Ali, from your perspective, is it safe at this juncture for Pinterest to bet the house on Gen Z?
Well, I don't think they're betting the house on Gen Z. I think what they need to do is they need to basically attract users of various age groups, right? Various generations. So, and I think they're doing that because you need to make sure you maintain those users as they grow, as they mature, as they, of course, become full-time employed, as they start to spend more, as they start to focus a little bit more on decorating their newly purchased homes, and so forth. So I think they want to make sure that they maintain that balance, but growth on that Gen Z front was pretty impressive, as you mentioned.
Ali, they also have a new partnership with Google Ads. How big of a boost do you see that being for user monetization?
I think it is. These guys have been pretty much what we refer to as a walled garden for a while, right? So they handled selling their ads to the advertisers themselves. Now, bring in third parties such as Amazon and now Google really helps them. For Google, it really helps them in terms of increasing monetization on the international front. As we know, Amazon certainly has a huge market share here in the United States, and they've done pretty well. They've gotten off to a good start with Amazon here in the U.S., but I think Google will help them more in terms of monetization on the international front. And if you looked, and you looked at the ARPUs, or the average revenue per user in the international markets that these guys generated compared with what they did in the United States, the gap was very, very big. So I think that that partnership with Google will help to narrow that gap over time.
All right, Ali Mogharabi, always great to talk with you here this morning. Morningstar's senior equity analyst. Thanks.